Hello everyone, today I'll be going over how to navigate a downtrend using price action trading. I am going to be recapping the Friday session on the E-mini S&P 500 futures, and the time frame is 2006 chart. So as price action traders, we don't use any indicators except for one supportive indicator only, which is the 21 bar EMA highlighted in blue. So of course I have to analyze the overnight market to judge where price is going to go next. And as we can see, there is a push down, but if we draw a measured move something like this, this far exceeds the measured move. Why does price keep pushing lower even after the measured move? Well, there has to be one of two reasons. Either there is a steeper channel, something like this, but we can see the pullback is too big. We can't expect a new low for this downtrend after we've pulled back this much, so this cannot be the right channel. So that leaves the second option, which is a wider channel. Even though this doesn't look so natural, actually it is the right channel, because as you will see, it follows price action rules perfectly, because we have overshoot leads to break. Of course, we have to respect the uptrend, and we cannot resume shorts until the uptrend plays out. If you zoom in, you have a push below the EMA and a failed sign entry long. Failed sign entry long, which is a reversal setup. But again, the uptrend is still in play, so we're not able to take there's no broad pullback. This doesn't look like two legs up structure. So I think a failed sign entry short is a bit too early, and I have to wait a bit more, even though it worked for quite a big scalp. We keep pushing lower, we still haven't reached new low, but now we've pushed too low to expect new high for this uptrend. So again, we're going to be following this downtrend, something like this. It has broken new low, and as you can see, there is a stronger pullback in the opposite direction, but the main bias, which is this downtrend, is still in play. So I still have to expect price to push down to test a new low for this downtrend. And now you have a higher low setup. But the problem is, I need a failed sign entry long here. Why have we not tested the new low for this downtrend immediately after this push down? Why have we reversed this high even though we still expect new low? These are all questions that are going through my head as a price action trader, and I can't be able to sell so early with the higher low, with the lower high, because it is a weaker setup than the failed sign entry long, and I think we would need a bit more confirmation to take a short here. It doesn't seem like we had a setup on the way down, so that is unfortunate. But now this downtrend has played out, so this is what you call an area of development. There can be one of three market cycles next, which is either continuation of this downtrend, which means we'll have to draw some wider channel for this downtrend, reversal, which means an uptrend will start, or we will go into consolidation. So I have to wait here. I can't take any trade. I have to wait to see the next market cycle for me to take a trade as a price action trader. Another push lower. It seems like this downtrend played out too. All downtrends have played out. I would need a very broad structure and a lot of confirmation for me to take a short. No real setup at this point. It looks like we're chopping around here, so the next market cycle may be consolidation. I'm gonna try to predict it, even though we can see quite a big amount of choppiness, downtrend, spike down, spike up, spike down, spike up. So already quite choppy. I'm gonna have to be careful. Just a lot of choppiness, no real trades. You have to try to stay out of zones like this where the EMA is in between the middle of these bars. There's a lot of spike up, spike down, but as you can see, price action rules still apply. First leg up, broad pullback, and a second leg up, and a second leg up. This downtrend, even though it might not look like it, also has to break a new low. There might be a new low, first entry short, failure, second entry short, second entry short, but this bar is huge. 7 points. Scalp's already really made. I mean, it doesn't seem like such a bad setup, but skeptical about how big this bar is, even though 7 points is quite £7 is a really big bar. If you're gonna take this trade, you have to place a very deep limit order around half of this bar. Try to get some retracement and then a push down. I mean, it is takeable, but I wouldn't advise beginners to take this trade because the bar is too big as a beginner. Just try to avoid types of trades like this. I'm gonna mark it for educational purposes, and I mean, it is contextually a good setup because the downtrend, you can't draw something like this. It's a bit too tight. I mean, downtrends are weaker in ranges, but this push down is also quite big, and the break isn't even at the EMA, very small break. So I am gonna draw something like this. It's better. If you took the second entry short, I can see why, but now we will see an even stronger trade. This trade is a trade you 100% should take. It's a lower high setup, confirming the second entry short. This is a great setup because now the bar isn't as big as this. You have more confirmation, and overall it's a really good setup because there's also slight overshoot for this downtrend. So you have to be very cautious taking the second entry short because it's the first second entry short after overshoots. But because it does look like 2 legs up, the bar is huge, you will be able to take this with a very deep limit order. But this lower high setup is the cherry on the top. This is a great trade. New high, first entry long failure, second entry long failure, but this bar is gigantic. Of course you cannot take this. Just from first glance you can see that this bar is too big. You'll not be able to take this trade. There is a higher low setup now. It looks like there is a kind of 2 legs down, first leg down, broad break, second leg down. So this is broad structure. You have to redraw an uptrend, something like this. The uptrend is still in play because this is such a broad structure, and the signal bar is quite solid. This higher low setup is another decent high probability setup. Now you're getting a bit too choppy in the middle here. You'll not be able to take like this lower high or anything like that. It's getting too choppy. You can zoom out here. As you can see, downtrend, first leg down, broad breaks, second leg down, a new market cycle begins, which is this range. Price action is being followed perfectly. There seems to be quite a lot of bounces on the support, so I'm not gonna draw something like this. I'm gonna tighten it something like this. So at this point you have to be asking yourself, why are we not making new highs? For the uptrends break, no new high, so many lower highs, you just keep going lower and lower. So I have to be careful. Even though this does look like broad structure, 2 legs down, we have to be careful taking long, because you have to remember the bias was bearish for the whole day. We pushed down into this range, we keep making lower highs, so I can't be fading breakouts anytime soon. No real trade again, and I see price action keeps going lower. So why does price action keep going lower? I have to draw a wider channel, something like this. It seems like it's a good channel, keeps price action in the middle, but you don't have to be perfect, you just have to be close. Overshoot. So what do price action rules say? After overshoot, you expect stronger pullback in the opposite direction. So I cannot be taking shorts. I also have to skip the very first second entry short, and I have to wait for the uptrend to play out. Of course, I cannot be taking any shorts, and you keep pushing lower. We keep going lower and keep going lower. So why do we keep going lower? Why is overshoot not generating stronger pullback? Well, the only reason to that, it has to be a steeper channel. Of course, you cannot draw something like this. Can we draw something like this? Oops. Something like this looks good to me, and now I can resume taking shorts as I please. Uptrend, something like this, and there's actually new low, first entry shorts, but this is a count reset, so you can only treat this like a first entry short. The only thing about it is the bias is so strong. At this point, you've been going down for the entire day. The bias is so strong. The bears are much stronger than the bulls. The double bottom is not the best, not very ideal for us, but you can. Trading is about taking risks. I think you can take a risk on this. Second entry short. As you can see, new low, first entry short, failure, second entry short. Second entry short, the reversal bar is quite nice, but the uptrend is still in play. The pullback is still in play. We have to respect it. We need to wait until this uptrend gets breaking new high. And if we wait a tiny bit more, there is a double trap. Uptrend played out with break a new high. Not the broadest, but quite broad. Very good setup. Even though the bar is a doji, it has quite a nice tail. Very good trade. The bias at this point is incredibly strong. Uptrend is breaking new high. This is where all price action confluences align. This is exactly where you need to be taking a trade, and it works. New low, first entry short failure, second entry short failure, double trap, but the bar is horrible. You cannot take double bar entry, and there seems to be overshoot for even this very steep channel. The bears are really at it, but this time overshoot does generate a stronger pullback. As you can see, have to redraw the uptrend, break new high for the uptrend, and there seems to be no reversal. So no reversal, we can't reverse down. Looks like the bears pushed too much at this, and they oversold it. But this was the very end of the session. Market closed. So that was it for today. A nice bearish day. We started off with a downtrend that had overshoot, break new low, no trade around here, no trade on the way down, unfortunately. But after all downtrends played out, you go into range, quite structured range, spike down, spike up, spike down, spike up. Everything plays out following price action rules. Two legs up, as you can see here. This downtrend had break a new low. You cannot draw an uptrend something like this, it's a bit too broad. Trends tend to be weaker during ranges, so you can't expect them to be that broad. But there were these two trades, second entry short and lower high. This second entry short was a bit too aggressive, too risky. If you skipped this, and if you took this, I can see why. I skipped it personally, but this lower high was great. If you were patient and skipped this one, this lower high is the reward for you. Really good trade. You need to push to the support of this range. Downtrend needs new low. Everything aligns. Lower high setup. Perfect trade. And then you transition into a downtrend. Seems like the bears were too long. I was already starting to see signs around here. Uptrend doesn't get new high. You're making too many lower highs. I was already seeing signs. I was predicting this, and it kept pushing lower. You got some trades around here. Second entry shorts. Okay to take, even though there is a counter reset. Aggressive but takeable. And then you had overshoot and market just reversed till the end of the day. So that was it. Nice trading day. You can capitalize on quite a lot of these trades, and there was a lot of confluences for every trade. So thank you everybody for watching. I hope you learned something from the video, and see you next time.